Good morning. So that's the last DXY update for this FOMC week. So what I wanted to go again and show it clearly to you is all the fibs that we are using for DXY to know where we can expect a pullback. Well, the first one I use is this big swing from 2002 to 2008, and we saw that's what gave the support with the 32 on the move down and give this bounce we have seen, okay, and this big confluence here of support and resistances. Then we go inside, so that just to have the big view. This one we don't need it anymore now, because we are in between those two fibs. One is at 95, the other at 89. So it's a big area. We could finish there. That could be one of the targets on the upside. Okay. Now, if we go inside, what is more accurate, precise, and interesting is these swings and all the swing we can find here. Then we look at this fib. We'll switch off this one. We look at this fib. This fib is an interesting fib. We measure this move down, and then we had this move up. We saw there was not a lot of interaction here, but it's pretty sure this fib will have interaction very soon, because these 23.6 and 21.4 are very important, and those fib has been holding the price nicely. When we came in this area, we can see it better on a daily chart. We see how the price has been holding here, here too, here same thing. Here we just pierced this one, but this one is not a very strong one, but we just pierce it, and we have soon this big area that is a very big support and resistance area and a very important fib area. So I will put that one in highlighted. So now if we go a little bit more inside, we can measure this move. And this one for me is quite important, because this move has been the one, this fib, was the one that has been holding the price to the peak here on the 76.4 fib. You see it, we went up, stopped here, and came down. So that's a very important fib for me, because we know it has been holding the price in many occasions. If now I hide the red one to see only this one, we see that we stop now right to the 50%, and you will see in a few seconds or minutes that we have another confluence here. So this one is important. You see how it has been holding the price here on the way up. Many days it has been holding it. So even here you see we spiked a little bit above it, but came back on the daily close under it. It's important to note that, because sometimes we can, I know some of you are very stressed as soon as the price do not respect to the level on a big fib like that. We can go through, spike a little bit above, and came back, and probably here we have some black level or green level. Okay, so this one is interesting, and we have defined this area, which is the 21.4 and the 23.6. I will just put them as a line. It will be easier to look at the chart without having too many information on it. So I put two lines here, and then I can hide again this fib, and we have the level. Okay, so we just do that, or I can even do it later. It's not a problem. We can keep it like this. Just verification that's all is okay on the red. Okay, perfect. So we know we have here the 23.6 and the 21.4 fib. 21.40. Okay, and 23.6. Okay, great. So now we have a clean chart with the fib on it. I try to make it easier to read for everybody. Then Then, if we go a little bit more inside, we have this move, which is this move up. We measure it, and we have been holding. It's an important one too, so I will hide the blue one now for a moment only. So we know this fib has been holding the price here, the 8860 fib, which is the one that gave the bounce we just get. It was important because when we broke under it and closed under it, it means the past trend is dead. So now it's not dead. We stay in this trend with this stop on this fib, and we just broke yesterday the 38.2 of that one. Okay. So what we can see here, an interesting thing, is if you see, for example, this area, we have a 23.6, and we have the other 23.6 here, the blue one, which is from the red fib. So we see we have a very big confluence at 92.43 area. Okay, great. Now, let's go more inside. And if we go more inside, what do we see here? We see we are now at the 61.8 of this move down. 61.8 is an important fib for this move down. So if we go back now, we see we have the 50% of the other swing here and the 61.8 of this move up. So that's what I'm looking at now. DXY will pull back. How far? We don't know. If we pull back here, due to the fact it's Friday and some people will take profit, we could see this fib at 91.48, or perhaps that one if we have a deeper pullback. So that's what I wanted you to see, because we have a lot of confluences. This one I don't need it. So we have a lot of confluences here, right where we are now. We had a short setup yesterday on this one. And if we put back this fib here, you see where we have been stalling. So in the night, we had a small pullback. I banked some here for 20 pips on the Euro USD long. And you saw we are blocked in between this 50% and 61%. You see it here, the 50%. Okay. So this confluence of 50, 61.8. And we have been blocked by the 38.2, which gave another bounce to the price. I think this morning we could just probably fall from here a little bit. Why? When I say fall, I don't say free fall. But why? Because we posted this double top here. So we posted this double top, and we had at the same time a little bit of short signal. So that could be the place where we would pull back and finally break this 38.2 to go to the 50%. And we will find the same thing with our black and green level in the next chart we will look at, because of course it's not random. The levels are very well calculated. We have a green level in the same place. So here we had a big confluence. The next dark level is at 92.43. So 92.43 is here, and that's exactly what we just discussed, which is a very big confluence of 23.6 VIB plus a black level. So this area for sure will give a reaction. We can make it different now. So that would be the next place where we will see a reaction if we go up. And if we don't stop there, this one will be very strong because we have a black level there. Okay? So I hope that is clear. And I repeat, I think we could see a little bit of correction this morning, probably. If not, we can see first a little move up. This 21.4 will do the job. We saw we can look left, and always looking left is very important with the fib, because you see how accurate they are. And we just did it with this 21.4, and we have seen it has been accurate in many occasions. So here and there we have been blocked on it and so on. Even when we went up, if I remember well, on a 4 hour or something like that, when we went up, we had stopped on those fibs. So when we stopped here, we came back a little bit, and then we went to the 23.6, which is the most important. And here you see again, we have been stopped on the 21.4. So we can get something there if we would break higher this morning, which is possible. But we have the two options and the price is exhausted. What is sure is between here and there, we will see a nice correction, absolutely sure. So that's why now is not the place for me to be long, but it's more the place to look for a short, probably 50 pips or 100 pips correction on the Euro USD after a big move we had over 200 pips or 250 pips. So we could expect 70, 80 pips or something like that. And probably on Tuesday, see the next bounce. And we have everything for the next bounce. So please keep that in mind. You can do those fib on your chart. So you have the level, you can write things, you can put here different names if you like to know what you are speaking about and be able to change them easily and fast. So this blue one, I need to put it a little bit more this way because we don't see the 50% written on it. We just put a line to the left, and that will be to the right, and that will be easier. Okay, so now, and I will put this blue one to the bottom, the numbers, and like that, easier. Okay, so it's cleaner. You see, it's important to have a clean chart, easy to read, and without needing to move it as I was doing now. So everything is here. You have all the information on the side, okay? So you see the first push-up has been pushed down again. So that's my sum up. We should see a pullback. We have a good chance to see it now. If we don't see it now, we will see it here or here. And here it can be really strong, okay? Now, if we look at the other chart to finish with DXY, because it's an important day today. So if we finish with DXY, I was speaking about this double top, which is a double top we just saw in the fib. And you saw we had a short signal on this double top with a big daily 4 hours pressure on the price we have here. Of course, it's normal with the move we have up. So we had a nice short setup. We're on a 15-minute. Short signal here, short signal here, short signal here, short signal here. So it's important to follow that because that tells us how is the trend, okay? So it's important to see how we react on the 15-minute here and on the 15-minute there. This 15-minute was a big signal. This one is a small one. If we see a little bit of move lower on that one, it means the bears are still pushing a little when they can, okay? Concerning the black and green level, so we have all on this chart. That's what I told you. This black level here, 92.40, let's say 92.44 to 92.53. 92.44 to 53. If we go back on the initial chart, we go there, and that's exactly where we have this area of the double 23.6 fib. So this black and green level on the upside of the other chart will give us some bounce for sure when we will be there. If we will not, if we will be there for sure. So next week when we will go in this area, we know we will see a big reaction because of the confluence we have of our black level. They are very strong, and the several fib I just showed.